I bid you all good morning, good evening, and good night, wherever you may be watching this transmission. It is I, Mike Martins. Today, let's talk about a little about oil and what is happening with oil. And there's already a lot of foreseeables here in the market and lots of tensions building. And we're seeing this happening on all major fronts. And a lot of countries are oil dependent, right? Especially Canada being one of them, Russia, Angola, Venezuela. Percentage of good percentage of the United States is oil dependent. And how long could they survive on? Let's get to Yahoo here, finance, and see what oil is at. Let's go to finance. Where are you? Finance. Let's see where oil is at. I don't think they could survive much longer on a $23 barrel of oil. That's just my opinion, guys. $23 barrel of oil isn't going to fly for much longer. So what's happening? Well, the blame game has started. Russia blames Gulf nations for oil crash, TASS. Moscow, Russia did not seek an end to the cooperation with OPEC or a sharp drop in oil prices. A senior Russian official told TASS news agency saying the Gulf nations are to blame from the crisis on the global oil markets. The Organization of the Petroleum Exporting Countries, OPEC, and Russia this month failed to agree with their deal to cut oil output should work. With global oil demand slumping because of the COVID, and OPEC wanted to deepen supply cuts, but Moscow said it would agree only to an extension to the existing pact. So this ain't looking good right now. Oil prices fell from nearly $50 a barrel on March 6th when the delay collapsed to less than $27 on Friday after Russia and Arabia Saudi, the de facto leaders of OPEC, said the world's two biggest oil exports would open the taps from April 1st. Russian position was never about triggering an oil prices fall. This is purely our Arab partners' initiative. Andrei Belosi, Russian First Deputy Prime Minister, was quoted as saying by the TASS late on Saturday. Even oil companies, who are obviously interested to maintain markets, did not have a stance that the OPEC plus deal should be dissolved. Belosi reiterated that Russia was proposing to extend existing curbs by at least one or more quarter, potentially until the end of 2020. But our Arab partners took a different stance, TASS noted him saying. Russian Energy Minister Alexander Novak has called a meeting with oil companies on March 23rd to discuss the state of the global oil markets. That's actually today. That Interfax news agency reported Sunday, citing two sources. So here it is. Now, you've got, what will it take to see a $65 oil again this year? And that's where oil needs to sit at least to break even. It's not even profitable. In a lot of countries, $65 oil is not even profitable, right? Right after the Saudi Arabia-led OPEC and Russia broke up their pact to keep oil supplies and prices in check, some of the U.S. oil industry were optimistic that oil prices would go back to 65 by the end of the year, regardless of the end of production restrictions. One of those was J.R. Young, president and CEO of King Operation Corporation, an independent oil and gas operator in Texas, who argued in a post at Forbes that U.S. shale shouldn't panic because prices would bounce back. It's in just 2 weeks, the situation on the oil market has changed dramatically, and prices for the U.S. benchmark are now in the low 20s. Not only has the Saudi-Russian oil price war depressed prices, but the falling oil demand with COVID caused the country lockdown in, heavily weighing on the outlook of this year's global oil demand. Analysts see 10 million barrels of oil or more lost demand, and right now no one expects oil demand to grow this year compared to last year's muted growth. So here it is. Production will slow down inevitably, but the huge demand destruction, which is just the beginning of the world's top oil consumer, the United States, is set to continue depressing oil prices at least until COVID pandemic is contained. Now, guys, hear me out. Please hear me out here, please. Now, the only angle or way, this is from oilprice.com, by the way, the only angle or way that I see now happening to get them off this oil slump is You guessed it, war. That's what usually is in the mix when you start to see assets, commodities declining, markets declining. What is a good way? Well, we know a pandemic does the complete opposite, but war. Yes, war. And that's what's on the horizon right now. And I'm feeling these war tensions. I don't know if anyone else is feeling them. Oil jumps 3% in volatile session as Fed promises an aggressive asset purchases to support markets. So oil markets are going to be supported. Oil jumped more than 3% on Monday as the Federal Reserve announced aggressive asset purchases to support markets. The move higher was a reversal from last week's steep declines, which saw U.S. West Texas Intermediate crude post its worst week since 1991. In a volatile session that saw oil alternate between gains and losses. WTI gained 3.23% to settle at 23.36 per barrel. Earlier, prices fell as much as 6% in international benchmark Brent crude traded 0.6% higher at 27.18 per barrel. COVID outbreak and subsequent business slowdown had pressured oil prices and set the Dow Jones Industrial Average and S&P tumbling into bear market territory. So one of the biggest losers, of course, was oil. That brought down the markets huge. Traders are also eyeing a stimulus bill from Washington, which could also boost oil prices. The massive stimulus funding package filed for a second time on Monday to get enough votes in Senate, although Senate Minority Leader Chuck Schumer said negotiations would continue. The fast spread of the virus infected more than 350,000 people worldwide, according to Johns Hopkins University, and killed at least 15,000 people. More than 100,000 people of that tally have recovered, according to Hopkins. As traders attempt to quantify what increasingly strict travel restrictions and stay-at-home mandates will mean for longer-term crude demand, prices have swung in either direction. So, this is the most dismal oil demand picture we have witnessed in a long time, with stimulus collapse in jet fuel, gasoline, shipping fuel, petrochemicals, and oil used to power generators, she added. So that's that right there. And U.S. oil turns its back on the premium as prices crash. Crashing oil prices oil firms rushing to cut budgets and exposure to the most prolific shale basin in the United States. The premium yet industry bodies expect that the shale patch to survive the oil price war and oil price collapse despite the short-term pain. The Apache Corporation said 2 weeks ago it was slashing its 2020 capital investment plan to $1 billion to $1.2 billion from previous range of $1.6 billion to $1.9 billion. Apache will also stop pumping oil in the Permian in the coming weeks, limit exposure to short-cycle oil projects. We are significantly reducing our planned rig count and well completions for the remainder of the year, and our capital spending plan will remain flexible based on market condition, John Christian V. Apache's chief executive officer president said in a statement. So with the significant reduction in energy investment over the past 5 years, exacerbated by the expected decline in shale production, I expect oil prices to recover once the global economy stabilizes and Pioneer to emerge in a stronger and more inevitable position through the actions we are taking today, Pioneer's president CEO Scott Sheffield said. Industry bodies in New Mexico, home part of the Permian Basin, are not all doom and gloom. It's getting challenging business environment, but New Mexico is well positioned for when we come out of it. So a lot of oil producers and oil developers, makers, refineries, all kinds, they're hoping that this thing gets fixed as soon as possible. Once you get the airlines back in the air, once the demand goes up for oil again, you'll start to see oil prices go up. But will we see it in 2020? What will it take to see a 65 oil again this year? I said it already, war. You want a 65 oil this year? You need a huge war in the Middle East, because a lot of countries are having a tough time surviving off a $23 barrel of oil right now. So it's hurting. It's hurting deep. Let me know what you guys think in the comments below. Oil It's going to be down, and it's going to be down for a good while. I got a lot of people asking me, is it a good time to invest in oil? Right now, guys, you do your research on what you think is the best thing to do right now. But there, right here, another article, little hope of energy rebounding, economist warns. As Canada's energy sector anxiously awaits policy response from Ottawa to address the falling crude prices, some observers predict little can be done to prevent a long-lasting downturn. Western Canada Select and main grade in Canada's energy patch fell below the $10 barrel again on Monday, continuing to slide, driven by the 1-2 punch of COVID, constricting demand and the threat of oversupply by Saudi-Russian price war. So the province of Alberta announced tax relief for the sector and other measures such as waiving millions in fees collected by Alberta's energy regulator. That could help out. That could help out a bit, but how long? For how long? That's the question, right? So that's what's happening. So we got lots of movement, lots of dividend-paying oil companies slashing their dividends too. And that's going to happen, of course. That's always going to happen because they're going to have to keep the company afloat, right? So I feel sorry. I've gotten messages from people that lost 20 to 60 to 150,000 in oil in the last couple of weeks. People emailing me and said, "Holy crap, Mike, you know," people are telling me, I remember when you told me you sold all your oil and got out of oil like 3-4 months ago, you know, I should have followed you on that. And, you know, but it happens. People, then I went into the junior miners. Junior miners did really well, got out of that. And then right now I'm dabbling a bit in pharmaceuticals, and hopefully pharmaceuticals will be the key direction for stimulus, because they could create stimulus in the pharmaceutical, big pharma, to see if they could help combat the COVID, right? That's the only thing I'm seeing right now that makes any sense. Instead of shorting the entire market, I think the only thing that you could see gains in is, in my opinion, this is get your own advice, professional advice, is in big pharma. So let me know what you guys think in the comments below. Thanks for watching, and we'll talk soon.